financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
All right, friends, welcome to you all around the world. Welcome to our very special Follow the Money podcast. This is episode number 411, and today's title, Trading Psychology 101. It's great to have you here. As you heard, my name is Jerry Robinson. I'm an economist, a trading coach here at followthemoney.com. I've been helping people just like you for many, many years right here through followthemoney.com. And whether you're a trader or an investor, and whether you focus on the stock market or the real estate market or the crypto market, we have so many resources here for you, both premium resources for our members and many free services as well, such as this podcast, which we do on a regular basis. So today, as I mentioned, today's podcast title, Trading Psychology 101. I was going back through the archives thinking about this episode and thinking, what have we not covered a lot of over the last, last couple of years or so. And one thing that I saw was trading psychology. We get a lot of questions on trading psychology, how to prepare your mind whenever you are trading, whether it be stocks. And by the way, this will apply to stocks or cryptos or ETFs or options. Trading psychology is, quite frankly, just something that that we all have to work on when we are trading any asset. And so I think that this is going to be a very, very helpful podcast for you. And we're really just going to focus upon this. We have no special interviews today. We have no other segments. We're just going to dive in deep on Trading Psychology 101. So you've probably heard many times that most traders fail to consistently earn money in the markets. And if you haven't, you should. Because in fact, many studies show that nearly 95% of traders fail to earn, and this is the key word, consistent profits. And therefore, they eventually give up trading altogether. And why? I think the question becomes why? Why is trading this way? What causes so many traders to fail in making money from the financial markets? We've seen, by the way, an incredible influx of investors and traders since the COVID-19 crisis began back, the pandemic began back in, early 2020. During that time, the Federal Reserve, of course, pushed in a tremendous amount of money, and the stock market began to boom. And many people overnight decided they were going to become traders or investors for the first time. And while that's great, it's good that people are empowering themselves and they are focused upon their finances and they're trying to improve. This is all wonderful. The problem is that many times people don't realize that success in trading in particular, and investing, quite frankly, but we're really going to focus on trading in this podcast episode. Success in trading begins in the mind. And so without a winning mindset, without self-discipline, trading profits will remain elusive, right? And this is why so many traders fail to make money. And from my own experience and research, I found that most traders, and I've coached, hundreds, if not thousands of traders over the last decade at least. And what I have found is that there's two very simple reasons, but they're extremely important, but two very simple reasons why new traders fail to earn consistent profits and why they eventually give up, and quite frankly, why this 95% of traders overall just fail. And that is, A, they lack a trading system with time-tested rules, and B, is a failure to cultivate a winning mindset. Now, these reasons are not just simply my opinion. These are, derived from many years of coaching new traders all around the world in the basics of making money in the stock market, crypto market, trading ETFs or options market. And from my experience, I have found that nearly every trader who fails to earn consistent profits in the markets lacks these two very important keys for trading success. And so in this podcast episode, what I want to do is I want to focus on the trading psychology that is required to develop a winning mindset. You've probably heard that psychology is very important to success in trading. But I would suggest to you that psychology is not only important, it is crucial if your goal is to carve consistent profits out of the market. Nearly every successful trader that I know approaches trading like an athlete approaches his sport. When they engage in trading, they put their game face on. They get their minds focused on the task at hand. So before we get into what that looks like, developing a winning mindset, let's just first define trading psychology. So trading psychology, what is it? Well, it's the mental aspect of trading. We really derive a lot of this from behavioral economics, behavioral finance, such a fascinating topic for those who have spent time researching. When I studied economics, I didn't study the behavioral side as much. Mine was much more of a focus upon economic history, different types of economic regimes and things of this nature. But there is a whole nother world in economics and finance that focuses upon why people do what they do with their money or why they do what they do in investing or trading or whatever. And it's a fascinating topic. Your mind is so powerful, in fact, that it can literally hinder you in your efforts to achieve trading success, right? This is why your mind, you can often become your own worst enemy. And people don't realize this when they start trading. They say, well, all I got to do is just buy low and sell high. Well, technically that's right. But the problem is that you're going to feel things in between that buying low and selling high that you are going to have to manage, right? Those things would be like greed and fear. We'll talk about those in a minute. But this explains why so many institutional trading outfits on Wall Street, for example, have turned to rules-based trading bots and high-frequency computer-based trading algorithms for trading, so as to overcome the tendencies of human nature to ignore rules when they are under emotional strain or duress. And so all newcomers to the world of stock trading soon discover that trading and investing is not just about having a great entry and exit strategy. It's also about being able to handle your emotions, to manage your emotions. In fact, if your goal is to unleash your trading potential and really become a great trader, and even turn your trading perhaps into a full-time or a part-time income, it's absolutely vital that you learn to master your emotions. And two of the greatest emotions that traders face, of course, are greed and fear. Right? Greed and fear are two of the biggies, so we all face them. But there are others, and I want to dive into those in just a minute. But first, it may sound absurd to some that successful trading requires the development of a winning mindset, especially if you're not a trader or if you haven't done it before. You may say that sounds strange. Why is it so important? But all you have to do is turn to the available data on the subject to discover how important a positive mental attitude is to a trader's long-term success. There's an old saying that goes something like this: what the mind harbors, the body manifests. It's a very important phrase. And simply put, what it's telling us is that our mental attitude will greatly dictate your future altitude. Olympic athletes know the power of controlling their thoughts. Right? You look at an Olympic athlete and you realize that yes, he has big muscles, and yes, he has worked and trained so hard his body, but his mind, if his mind is loosey-goosey, if his mind is not trained, all of that hard training that he has spent on his body could actually go undetected and actually lose him the gold medal if he's not careful. So it's important that our minds are in the game, so to speak, when we're trading. Likewise, just like Olympic athletes who control their minds and have self-discipline and impose upon themselves, rules. Well, it's the same way with successful traders. whether you're a day trader, a swing trader, a position trader, you need to believe in your abilities. You need to believe that you will succeed. You need to expect success. And most importantly, successful traders have learned to control negative thoughts and negative emotions that can destroy their trading confidence. Now, this is huge. Trading confidence can be very fragile. And if you have a string of losses in the market, it can crush your confidence, especially when you're a new trader. And then you set yourself up perhaps in a bad cycle, maybe even a self-sabotaging cycle, right? So mental negativity and successful trading simply don't mix. And while it can be difficult at first, I encourage you to view your trading losses simply as the cost of doing business, right? So when I know I'm talking to many new traders out there. Some of you have been trading for some time, but I really want to speak to that new trader out there to help you understand that you're going to lose money in the market, right? No matter what anybody has told you, no matter what you've heard, losses are simply part of the process. It's a little secret here. All traders lose money, right? They all lose money. It doesn't matter how much knowledge, how much experience, how much intellect a successful trader possesses. He's going to lose money occasionally on a trade, and that's part of the trading business. So the goal becomes, at this point, simply to let your gains exceed your losses, right? So that's really what we're focused upon here, is teaching you to be able to allow your mindset to help you in the process and not be a hindrance, right? There are so many psychological enemies to trading success. I mentioned to you greed. Greed is, of course, a massive problem. Impatience. I'll come back to some of these in a minute. Impatience is huge. Fear of failure, not just fear, but fear of certain things. A fear of failure in trading is huge. A fear of loss. Well, that's an enormous psychological enemy of a trader. Fear of success. This one is hard for some people to imagine. Say, why? That would be strange. But some people actually set themselves up for self-sabotage, and they don't believe they're worthy of success. They may not know it at the time. They may not really realize that that's deep within the recesses of their soul or their mind. But when they begin to succeed, you will see sometimes people they'll move into self-sabotage. Some of these things, of course, can be very deep-seated and perhaps not appropriate for just a simple, podcast. You would need to, go and, visit someone and drill down deep and find out what are these emotional issues that I'm facing. And believe me, trading will bring up emotional issues. There are few things that are as potentially emotional as putting your money at risk in the stock market and then seeing the stock market go up and down, right? That can be very, very volatile. And if it's new to you or if it's different, then, you're going to have to learn. You'll learn a lot about yourself, quite frankly, whenever you trade. It's what I tell new traders. Just be prepared to learn more about yourself that you didn't know. Pride and overconfidence is another psychological enemy. You see a lot of that on social media. A lot of it's probably fake, but you'll see people who, are very proud of their trading prowess or they're overconfident in their abilities. And this, of course, is always a wrong avenue. You may be great at trading. That's fantastic. But overconfidence will surely bring you down, right? Too much pride in that will surely bring you down. It's the same way with, we brought up Olympic athletes earlier. It's one thing to be confident. It's another thing to be overconfident, right? It's one thing to be, proud of your abilities. It's another thing to just display excessive pride. And sadly, in the world of trading, you tend to see people who try to compensate for other parts of their life through their trading success. And so they may drive their net worth. They may try to show off flashy clothes or wardrobes or houses so as to overcompensate for some other lack of character that they have. They feel that money somehow, covers all of that. So these, obviously are psychological enemies of trading success. And let's just begin by talking about fear, because we had brought up fear as a serious psychological enemy to trading. Well, fear is one of the most debilitating emotions that can grip a trader, leading him to overreact to perceived threats to his trading capital. It's a destructive emotion that clouds our judgment when we're trading. The presence of fear is a clear indication that the trader has failed to stick to and internalize his trading plan, right? So you need a trading plan. And this is where many traders just kind of drop the ball. They are following someone on, social media, and they're waiting for that person to buy something, and then they buy it, but they don't have any conviction. They don't have a trading plan. They haven't done a lot of the homework that they need to do, right? And so if you don't have a trading plan, then you're really going to be susceptible to the emotions that arise because you won't have anything you won't have a reference point, right? If you find that you're having a hard time executing on a trade, or if you constantly sell off a position too early, then it's likely that you're being victimized by emotional fear, and fear will cause you to overthink your entries and overreact to normal market turbulence. And in the end, it will ultimately place a hard cap on your earnings potential from the markets. Of course, we're all only human. We all face human emotions like fear, but you can overcome fear in trading. And the way you do that is, A, you have to have a healthy and proper respect for the markets. After all, one wrong move, and even the best trader can take a substantial loss. However, when the fear that you're experiencing is irrational, it becomes unhealthy, and it can inhibit you from achieving your trading goals. And two of the fears that are most common to traders are the fear of losing money and the fear of losing the profits that you've already made, right? Less commonly acknowledged fear is failing to capture all of the potential upside of a given trade. When I first started trading more than 20 years ago, I was constantly worried about losses. In fact, that was my constant worry. And I almost always second-guessed my every move in the markets. It may have been a good idea, but at the same time, I soon realized that my own fears in trading were mainly due to the fact that I didn't have a solid trading plan. In fact, that's how I got my start. I was talking to someone at work when I was working in corporate America, more than 20 years ago. And I found out this gentleman was trading, and his name was Tim. And he was making a little bit of money on the side, and he kind of provoked me to jealousy, quite frankly. I thought, this is a neat way to make money. And so I began to do it myself, but I didn't have a plan, and I don't even know if he did, but I certainly didn't have one. And therefore, I was just an emotional wreck when I first started trading. And maybe some of you can, sympathize with that who are new traders. I was an emotional wreck. I was worried about my trading capital. I was worried about every trade. I didn't have any rules, quite frankly. And so if that's you, as you're listening to this, you're a trader and you don't really have any rules, wow, that's something that you've got to fix immediately. In fact, here at Follow the Money, we provide our own trading rules to kind of help you along the way. You can get those for free on our website. If you go to our website and just click up in the menu, you'll find the top 10 trading rules that you can download. Of course, all of our members have access to that as well. Yeah, I encourage you to download that list. We'll have a link to those as well in today's show notes. But as I mentioned, if you trade without a plan, meaning that you trade without any hard set of rules, then you're probably right to be afraid, right? You really should. The stock market is the wrong place to make up your own rules as you go. So the key to overcoming fear in trading is to develop a trading plan and to stick to it, right? So that may mean setting certain stop loss rules, right? If a stock fails and stops out, then you've got to have, a way out. You've got to be willing to take the loss. And by sticking to time-tested trading rules, then you can eliminate much of the anxiety that affects those traders who fail to use a trading plan. Another reason why people will often have tremendous fear in the market is that they have too much money exposed, right? So if you're trading and you're really concerned about your trading capital, it's possible that you just have too much, at risk. Maybe you need to limit the amount of money you're trading to allow you to be able to sleep better at night, right? And you need to be able to accept, and I tell every new trader this, and this is why it's important probably to limit the amount of trading capital when you're getting started, is that you need to accept the fact that all 100% of your trading capital could be lost. Right? And once you come to terms with that, then that will eliminate the power that the fear of loss currently has over your mind. Because after all, if you're willing to lose it all, well, then suddenly that power of the fear is just not that powerful. Now, obviously, you don't want to lose all of your money, and you certainly want to protect your money. But my point is that you may want to start with an amount of money that you could acceptably lose. If you're losing rent money, well, no wonder you're scared, right? That would create a lot of chaos and stress, emotional stress and duress in your life, maybe even family problems, right? You don't want that. So when you're trading, you only want to put at risk the money that you can lose, and that automatically takes away one of the greatest fears that you have about losing, money. Now, you still never, I don't want to imply to you that you don't want to be protective of your money. Of course, that is rule number one, don't lose money, right? But if you do, you won't be living under a bridge, or you'll be able to pay the rent still, right? So in other words, you want to make sure that your amount that you are trading is not more than you can bear to lose. And it's that simple. If you want to change the way you react to your fears, it begins by changing the way that you view those fears. Change your perspective, and you'll be on the road to conquering, your fears. Now, another thing that I want to say is that even if you have a great trading plan, even if you've worked hard to create a trading plan, well, those well-laid plans can be devastated by one act of impatience, right? Impatience will often lead to acts of foolishness. I define impatience as a premature ceasing of method. That is, you know what you are supposed to do, you know what your rules are, you know what you're doing, but you prematurely cease doing it. You suddenly just stop doing it. And that can lead, that's of course impatience. You become impatient with your rules. You become impatient with your process or your method. And that, of course, can lead to great acts of foolishness, right? Well-laid plans can be devastated by one act of impatience. And the problem is that patience requires trust. And if you don't trust your plan, well, you're not going to be able to rest in that patience that you need. Quite frankly, the patient, rules-based trader can expect success if he applies wisdom to the skill of trading, right? But the proud and boastful trader is almost always humbled by the stock market, right? We call him Mr. Market, as he's well known in Benjamin Graham's book on the topic of the stock market. And by the way, I have a couple of books I want to recommend to you as well before I close out today's podcast. I'll do that here in just a few minutes. But let me just close out today's episode here by talking about discipline. It really is true that when it comes to trading, you are your own worst enemy. So many people see the trading lifestyle and they want it. And I can tell you as a part-time trend trader myself that the trading lifestyle is wonderful. As a trader, I can work from anywhere. I get to work when I want. I don't have a boss whenever I'm trading. I don't have, customers when I'm trading. I don't have inventory to worry about when I'm trading. It's a different kind of business. But the key to being able to create this trading lifestyle in a consistent way is discipline, right? You got to impose discipline. In fact, as I've stated to you over and over again on today's episode, most traders fail because they don't have a trading plan. And because they don't have a trading plan, they're held hostage by their emotions, which leads to ultimately losses in the market. You may be surprised to learn that most people who trade don't have a plan or a strategy. That has been one of the recurring nightmares that I've had as I've coached people over the years, helping them, to realize the importance of having a plan. Most approach trading, quite frankly, as a hobby, and therefore they don't take the time necessary to develop a set of money management rules, such as using stop-loss orders. And additionally, most traders don't review their gains and losses, so that they're unable to learn from their mistakes and their failures. And so their failures and mistakes just continue to haunt them, but in a vague way because they don't know why they're making those mistakes, because they don't review them. So without a consistent trading plan that includes money management rules, most traders are usually nervous about their trades and they lack confidence in their trades, which leads them to second guess their trades. And this, of course, explains why so many traders lose money in the market, as we said at the outset. So by developing a trading plan that includes sound money management rules, you can control your emotions and conquer your fears of trading. And if you already have a solid trading plan in place and you're struggling with your emotions, then I want to stress that maybe you may want to lower the amount of money that you're placing into each trade until you can get a handle on, those emotions. Again, sometimes the whole problem is you're just putting too much money at risk in a trade, right? So that's certainly something to think about. I want to close out. As I mentioned to you, I have two books I want to tell you about. First book is by Edwin Lefevre, which is supposed to be a pen name for the great trader Jesse Livermore. The title of the book, Reminiscence of a Stock Operator. Very, very interesting book that's definitely worth a read. It's a classic, but you will see so many interesting things. I'm looking at my own copy here. I have underlines everywhere and highlights because you learn so much from this interesting story that is told by a stock boy who kind of learns how to trade through the process of trial and error. And it's a really interesting book. Reminiscence of a Stock Operator. Edwin Lefevre is the author. Be sure to pick it up if you're a new trader. Also, another book that sounds super gimmicky, but it's not. It really does. When you hear the title, you're like, oh, that's got to be a gimmick. It's called How I Made $2 Million in the Stock Market. The amazing story of a world-famous dancer who trained himself to become one of the most successful investors in stock market history. The author is Nicholas Darvis. You've probably heard of Nicholas Darvis if you've been trading for a little bit. He is a famous trader of yesteryear, and his book, How I Made $2 Million in the Stock Market, is just filled with gems. Great gems, great trading rules. It'll be a wonderful benefit to you to read either of those books, but I would recommend that you have both on your shelf. And I'll have a few more comments on the other side of this break. Hold tight.
And Follow the Money returns after this.
Hi friends, it's Jerry Robinson here from Follow the Money Radio. Do you want to learn how to trade options? Are you intimidated by options trading but still have a desire to learn how it all works? If so, you will be pleased to know that our options trading course is now on sale in our online store for only $37, but for a very limited time. When you purchase this 5-hour online video course, you will learn how to leverage the power of options to generate a steady stream of income from the markets while minimizing risk. This course, which is deeply discounted for a limited time, provides you with 8 full-length video lessons with me that will walk you step by step on how to get started in the world of trading options. This video course begins with a comprehensive introduction to key options trading concepts, including calls and puts, premiums, volatility, along with an introduction to option Greeks and how to properly value an option before you make a trade. But this video course not only introduces you to the basic concepts of options trading, it also provides you with 3 proven option trading strategies, including how to rent out the stocks that you already own to others to generate a passive income by selling covered call options. We'll also teach you a smart way to buy call options for profits, and our students have told us that the secrets revealed in this video alone are worth the price of the entire options trading course. You'll also learn a unique options trading strategy where you can get paid while you wait to buy your favorite stock. This is an advanced trading strategy that is one of our favorites among our top trading students. So this options trading course contains a tremendous amount of knowledge jam-packed into 5 full hours of video presentations that you will want to watch over and over again as you begin or continue your trading journey. If your goal is to learn how to make money with options, this is a must-have education video series. And you can unlock this entire video course right now by simply going to followthemoney.com/shop. There you'll find our online store and simply look for the options trading course. This is a special introductory price and it is a limited time offer, so act now. Go to followthemoney.com/shop and take advantage of our deeply discounted options trading course today. All right, friends, welcome back to the program. Great to have you here. My name is Jerry Robinson. Followthemoney.com if you want to find us online. We got lots of stuff there for you, whether you are already a member or if you're not a member. We have lots of great information there for traders, investors, no matter what you're investing in, no matter what you're trading. We have a lot of great resources for you, educational resources, ongoing video coaching if that's what you're after, or lots of courses, if that's what you're looking for. Just go to followthemoney.com. Also, be sure to subscribe to this podcast if you're not already, and check this out every time we put out a new episode. We're always, providing more education and information. And by the way, speaking of our podcast, I was going through the list to see if we had other podcasts similar to this, and let me recommend a few to you. Episode number 367 is entitled 5 Wisdom Keys for New Traders. I really recommend that to you if you're a new trader. Also, there's an episode specifically devoted to fear in trading. That is episode number 321. It's entitled, Are You Afraid to Trade? And also, episode 383 is entitled 2 Psychological Enemies of Every Trader. So we have some good stuff here in the archive that you can go back, and all of those podcasts are available to you once you subscribe to the feed. So it's all there. You can go to our website, followthemoney.com, and learn more about us and all of the services that we provide. Before we close out, I want to leave you with a final word, but before I do, just a few final thoughts as well. There's an old saying on Wall Street that pigs get slaughtered. It's so true. Oftentimes, we, as traders, we will hold on to a position too long instead of taking gains. That can really be a bad idea. There's other mistakes that people make too when they're trading. Number one is stubbornly holding on to losses, right? When a stock goes down and you just sit there and hold it and you decide not to sell, well, you better have a good reason. Usually people don't. Another mistake I see with traders is that they always want to be right? An obsession with being right. Boy, this will really hurt you in the long run. You really just want to make money in the market. You don't necessarily have to be right all the time. So if you have that obsession, get sure to break that, because that's going to hurt you. Another mistake we see people make is that they're often afraid to make mistakes, and that prevents them from taking risks. That can be a problem. Also, probably one of the greatest mistakes that new traders make is that it's paralysis by analysis. There's so much to learn. And on top of that, not just the education side, but there's so much noise going on in the markets, right? So the stock market is a noisy place. Everybody has an opinion about everything. And so if you begin to listen to all those opinions and you begin to ingest all of the information that's coming out, it can be very, very paralyzing to you as a trader. So you really want to, instead of just ingesting every new press release that comes out on a daily basis, you really want to hone in and stick to your trading plan, have some structure, have a consistent approach. Many traders are all over the place. They're changing their approach, always changing the approach that they take. Every trade looks different. They jump from one time frame to another without purpose. They change indicators without purpose. They chase price and so on, right? So there's lots of issues there. But I would say that, for success long term, you really want to view your trading business as a marathon, not a sprint. Don't have unrealistic expectations. Tune out of the social media feeds that are promoting a get-rich-quick mentality. It's much more important to understand that while you will hit a few home runs, trading is an arduous career, and it takes lots of time, patience, discipline, and effort to succeed. So when you view your trading as a marathon and not a sprint, like I have to make all this money in 1 week, but instead I'm going to take years to learn this and turn it into a skill that I can use forever, now you're thinking about it correctly. So lots of information in this podcast today, this episode. I sure hope it's been helpful to you. And if it has, reach out to us. You can contact us through our website. If you have a question, a follow-up question about this, or maybe you're wondering about a particular thing that you've heard about trading, just shoot us a question. We'd be happy to field any comments or questions that you have. Just go to our website, followthemoney.com, and click on the contact button. We'd love to hear from you. And as always, I like to leave you with a final word, this time taken from self-made American businesswoman Melody Hobson, when she said, "The biggest risk of all is not taking one." It's a very true statement. Don't let a fear of failure prevent you from taking a calculated risk to achieve your goal. Taking risks can sometimes seem scary, certainly at the time, but those risks can often lead to powerful opportunities. And of course, success rarely just falls in your lap. You have to go out and pursue those opportunities and make them happen. And that's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.